In the near term, though, by the way, it's good to see you. This market has not looked good technically or fundamentally. What more do you see coming from a selling perspective?
Hi, Ryan. Good to be with you. Well, we're currently breaking through some major trend lines, support lines in the market, and that's a big concern. Obviously, we just hit the February lows again yesterday, which are support. And because we are breaking, there is risk to the downside, and we don't have a confirmed bottom yet. What I'm looking for is obviously some sort of signal that we have a confirmed bottom in place, and maybe the Fed will be the trigger for that this week.
Yeah, in fact, we heard Jim Cramer talking about how there's three risks to the market: the Fed, and the Fed. Do you agree with that?
You know, it's interesting. We're coming into this Fed meeting with extremely oversold readings now. That doesn't really typically happen. And historically, the Fed meeting is a trigger for upside. So it's clear the market wants to have some sort of certainty or some sort of positive news, because obviously any news right now is bad, which is exactly the polar opposite from what we've seen at the beginning of the year when everything was good news.
So how much of this market then, Sven, is being driven by technicals, and how much is being driven by fundamentals and or the Fed? Who's in charge?
I think right now technicals are the key driver of everything. At the beginning of the year, we basically had too much good news, too much optimism, and then we had a tax cut that may ultimately prove to have been the final drug to get this market overdosed, right? We had this big global blow-off top in January. Then we had an initial correction that was kind of your first shot in the dark here in terms of maybe something is in the bushes. Then we had new highs coming in the summer and the fall on all these thinning market participation with big technical extensions. And then we had, and this is the big sign here that we've seen before, we had new highs on negative divergences with the banking sectors not participating, making lower highs. And this is your classic topping signal. Now, I'm not saying we're having a top in place here, but it's a warning sign, because this is basically what you've seen in 2007, for example.
Now, you assured me that you did have maybe a sliver of hope, a glass half full view, Sven. What is your reason to be maybe optimistic about equities here?
Well, there's, aside from the technical oversold readings here, there's, interestingly enough, this is the first December since 2000 where equity markets are making a new yearly low in December. Back then, we had a similar structure in place where we saw high technical extensions on tech, then we saw a lower high, and then we saw a breakdown into December. Now, that was ultimately a topping market that produced a recession into 2001, 2002. However, in the middle of December, right before Christmas, there was a low that produced a large rally of up to 10% into late January. So the markets may be setting up for something similar here in terms of a counter rally.
So it could have a little bit of a counter rally bounce, you think? Maybe a little New Year's party, but a short one, Sven?
Back then, it went all the way into late January. So this could be a multi-week rally that may emerge.
You know, I love your charts. I love your perspective. I also love your sense of humor. I've been mispronouncing his name for about 2 years. And I said I texted him this morning and I said, call me Ryan. And you did. And that's why I like you, Steve. Good work. Steve Henrich of the NorthmanTrader. Sven, it's a pleasure. We'll see you soon. Merry Christmas. Thank you very much.